Hey everyone, Gabrielle Davis here with eXp Realty, and I am here to discuss what happened at the fourth quarter 2025 in Alden Bridge. And everything I'm going to talk about now also applies nationally. So let's get started and I'll share my screen. Okay, so we're going to look here at November and December of last year. We can see the average list prices are $585,000 and $523,000. The average sold price is $552,000 and $559,000. Now these have dropped since the fourth quarter last year, and they've also dropped month over month. What also decreased is the close to list price ratio, which is the percentage that owners are getting of their list price. So in the past, it's really been pretty high, 99%. You can see last year was 99%. It always drops a little bit in December, but October again was 99%, and it dropped 2 months in a row. With those drops, we also see an increase of days on market. So what does this indicate for us? It indicates a softening of home prices. So after COVID, which increased our property values, which then increased property taxes, insurance has gone kind of crazy, right? And then the interest rates increasing created a problem for both buyers and sellers. You know, buyers had an affordability issue, and then the sellers did as well because they were afraid to list their house because they had nowhere to go because they had these lower price mortgages, and they were looking at going from a 2% to maybe a 6% or a 7% at the time. You know, that created a problem because sellers weren't listing and buyers weren't able to buy. So it took a little bit of time, but the market started to shift at the end of 2025. Sellers were not getting the bigger price tags that they wanted, and it created more negotiating between buyers and sellers, which actually is a very good thing. It shifted, and it's heading towards a more balanced market. So what's happened is that buyers are becoming very intentional and very strategic in their offers. So every Friday morning, I attend a mortgage update meeting. And in January, the mortgage lenders have been very, very busy. It was a very pleasant surprise to them since the last quarter of last year was very slow, but they have been extremely busy. The anticipation for rates for 2026 are to remain at 6.5%, and buyers are getting used to that, which is also a good thing. What they're doing now, they're saying, it's a new year, we're tired of waiting, we're going to go out and buy, and then if rates go down, we'll just refinance later. And we're very lucky here in the Woodlands with a strong school district, all the amenities. You know, it is a very desirable area, and so that's good for our sellers as well. So just a little recap, 2025, sellers had the advantage, homes moved quickly, buyers had limited options. At the end of last year's quarter ended slow, but in 2026, buyers are going to have more choices and more negotiating power. So therefore, sellers need a very clear strategy. And overall, the market feels healthier and more sustainable. We're no longer in a frenzy, and that is not a bad thing. I really think 2026 will bring increased buyer activity, more competition for well-priced homes, and a stronger overall spring market. So for buyers, the current window definitely offers opportunity, and for sellers, preparation and pricing are definitely key. So I want to make mention about the difference between the lower interest rates and the quote higher interest rates. So when we had 3%, the economy was not doing well. The money was moving from the stock market into bonds and therefore affecting our investments. The government was buying mortgage-backed securities, and then the interest rates at 6%. It's the opposite. You know, the money is going from the bonds into the stocks. And with that said, those of us that have money in the stock market and investments, even though we may have a slightly higher mortgage payment, our investments should be doing better. The mortgage payment is 6%, and the investment should be now earning 15 to 20%. So that's something to bear in mind as well when you're talking about interest rates and looking at financial stability long term. If you or anyone you know is thinking about buying or selling, or just really want to understand what's happening and how that affects, your specific situation, I'd love to be a resource for you. I am available for a free consultation. Just shoot me a text, give me a call, whatever you need, I'm here for you. So I wish you a very happy, healthy, and wonderful 2026. Make it a great day.